We are in the midst of earnings season. We kicked off with financials, and Bank of America this morning gave us indication that it was about a 16 to 17% increase in the trading environment that really attributed to their success. Also on the macro front, they have really adequate reserves positioning for a 6% unemployment. So I think that's a good indication into the consumer health. I listen to that for financials and then go into my picks. So the way that CME relates to that, CME is an exchange mainly on futures products. If we think about this uncertainty that we have within the macro environment in regards to tariff policy and how to position for that, from a trading perspective, that would go into hedging. And of course, the futures market, which CME covers, which is inclusive of commodities and a lot of other products. And in addition to that, we have an increase in retail participation. There is an increase in this 24/5 trading that brokerage firms are starting to introduce. Even Schwab is now coming on with 24/5. And so since that's the equity perspective, we still have to remember the futures. They're already nearly 24/7 from a market access perspective. And then if we think about the trend of just how the retail market and markets work to hedge properly, you need options and derivatives. So I think that's only going to position CME Group to be a beneficiary of that increased uncertainty, which equals increased trading, which also this expansion of more market access will benefit CME from a lot of fronts that I think will translate into earnings that aren't necessarily recognized yet.